it's time to talk business. And this is thanks to our partners. Let's get a market update with our partners, Forsyth Barr, and Zoe Wallis joins us. Zoe, good morning.
Good morning, Ryan.
Good to have you. So, what are we talking this morning?
Well, I think the obvious big thing this week is the RBNZ's OCR decisions we've already talked about this morning. But look, it's a pretty finely balanced call, I think, between cutting by 25 or 50 basis points. We're leaning towards the 50 basis point camp, and we think that while you've got, some upside risks to near-term price pressure and inflation, we've still got things like rates and food costs going up. When you look over the medium term, the economy is weak enough to justify getting some more runs on the board in terms of delivering lower interest rates now to stimulate the economy.
Yeah, and it seems, I think that the markets are slightly tipped in that favour as well. The quarterly survey, the business survey from NZIR is going to be quite crucial, coming out tomorrow, isn't it?
Yeah, I think that is going to be a really interesting one. Obviously, the Reserve Bank's putting a little bit less emphasis on GDP or economic growth data coming through, given the lags that we're seeing and perhaps some of the volatility actually coming through in those numbers as well, with revisions and bouncing around quite a bit. So what you're seeing is the bank's trying to put some more emphasis on actually sort of forward-looking indicators that suggest where things are going over the next 6 to 12 months. What we've seen is that that's been a pretty mixed bag to date, and QSBO is going to be another one of those key indicators that they're looking towards. The risk is that it just shows the New Zealand economy, even though businesses are feeling a bit more confident about things, activity levels aren't really firing at this point in time, and that would make the case again for more easing. But the market, as you say, is very much sort of split on what you see, whether it's 25 or 50. There's about a 40% chance of a 50 basis point cut, and the market's fully priced for a 25 move. So if we do see a 50, as we expect, that could cause a bit of a reaction in terms of financial markets. So downwards pressure on interest rates, particularly in the short term, probably more downwards pressure on the Kiwi dollar, but also, a bit of a question mark around what that means also for the New Zealand equity market as well. And obviously lower interest rates tend to help support the local equity market, which is already having a pretty good run over the last few weeks and months.
Yeah, markets, there's not much of a reaction to the shutdown news out of Trump's America.
Yeah, nothing really. Markets are very much taking it in their stride for now. It's obviously only been a few days of shutdown. We'll see if that continues as it progresses. But what we've seen in historical episodes is that actually financial markets don't really care too much around US government shutdowns. And what you see is the economic impact from lower activity from the government through that period actually bounces back quite quickly, and overall the net impact isn't material. So equity markets are pretty benign at the moment, pretty taking it in their stride. We actually saw US markets hitting new record highs last week as well.
So I appreciate your time this morning. Thanks so much. Zoe Wallis, Forsyth Barr investment strategist. Thanks to our partners at Forsyth Barr.